Hey everyone, welcome back to Corporate Decoder. Today, Z Squared Inc. just filed an 8K detailing a major acquisition, new leadership, and stock issuances. And I am seeing some interesting moves. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is making a big push into AI infrastructure and reshaping its executive team, all while issuing shares for new deals. Alright, let's dive into this report from Z Squared Inc. It is an 8K filing which companies use to announce major events that shareholders should know about. This particular filing spills the beans on a bunch of significant happenings. First up, Z Squared has entered into a binding letter of intent to acquire Skycore Digital LLC. This is a pretty big deal because Skycore is involved in data centers, and the plan is to expand the company's AI infrastructure. They're talking about acquiring 100% of Skycore's membership interests. The acquisition agreement outlines that Z Squared will issue shares of a newly designated Series B convertible preferred stock to the sellers, with an aggregate initial liquidation preference of up to $22 million. This preferred stock has some interesting features. For starters, it has a fixed value of $1,000 per share and a liquidation preference that ranks above existing common stock. It also comes with dividend options, either cash at 8% per year or pay in kind at 10%, which sounds like they might be deferring cash payments. A key point is its conversion into common stock. It can be converted at 110% of the 20-day volume. Weighted average price of the common stock at the time of the letter of intent. There is also an optional holder put right, meaning the holders can sell their shares back to the company annually starting from the second anniversary of the closing, but there is a cap on that. And finally, there is a mandatory redemption on the 7th anniversary. The deal also includes binding provisions like a 90-day exclusivity period for Z Squared to do its due diligence and a $500,000 breakup fee if things go south under certain conditions. The closing date is set for the 30th of June 2026, but that is dependent on finalizing the deal documents and meeting other conditions. Next, the company amended a consulting agreement with Group 10 Holdings LLC. As part of this amendment, Z Squared agreed to issue 200,000 shares of its common stock to Adam K. Wasserman, who is the main person behind Group 10. This issuance is being reported separately as well. Then we have a corporate services agreement with Moneta Advisory Partners LLC, or MAP. MAP will provide investor relations, content, media, and advisory services for a year. In exchange, Z Squared will issue up to 566,000 shares of its common stock. This includes shares given out upon signing, more shares based on hitting performance targets, and bonus shares. These shares are tied to specific milestones and need verification from the company's compensation committee. The terms also mention leak out and lockup provisions, which are common for shares like these to prevent a large sell-off that could hurt the stock price. There is also an investor relations consulting agreement with MZHCI LLC. MZHCI will handle investor outreach, financial media coordination, and other ER services. For this, Z Squared will pay a monthly cash fee, issue restricted common stock valued at $100,000, and potentially pay bonuses in cash or stock based on hitting performance targets like increased trading volume and getting media coverage. These shares are also considered restricted, and a marketing services agreement with Fulcrum New Amsterdam LLC, doing business as Retail Sparks. Retail Sparks will provide marketing and outreach services to the company for 3 months. Z Squared will pay a monthly cash retainer and issue common stock valued at $75,000. These shares are also restricted securities. Now, all these agreements involving the issuance of stock are being addressed under Item 3.02, which covers unregistered sales of equity securities. This means these shares are not being registered with the SEC for public sale, likely because they are going to specific parties as compensation or in private transactions. We're talking about the Wasserman shares, Massachusetts P shares, MZHCI initial shares, and Retail Spark shares. The company states these sales are exempt from registration under the Securities Act of 1933, relying on exemptions like Section 4 At 2, which is typically for private offerings. They highlight that there was no general solicitation, and that the recipients are sophisticated or accredited investors. Moving on to Item 5.02, this section details changes in the company's leadership. It confirms that effective the 27th of April 2026, all directors and officers serving before the merger resigned. This is a standard procedure after a significant event like a merger, but the big news here is the appointment of new officers. David Halliburton and Michelle Burke have been appointed co-chief executive officers. Brian Cogley is the Chief Financial Officer, and Alyssa Stahl is the Corporate Secretary. Ryan Sherdell has also been appointed Chief Marketing Officer. These appointments are effective the 27th of April, 2026. The filing provides some background on these individuals. David Halliburton, for instance, has a background in investment firms and real estate. Michelle Burke has experience in digital asset mining and infrastructure operations. Brian Cogley has a strong accounting and finance background, having worked at accounting advisory firms and banks. Ryan Shadell has led marketing efforts for publicly traded companies. Following the merger, the board of directors also saw changes. The board size was increased, and David Halliboo, Michelle Burke, Adam Son, Brian Fewest, and Kenneth Cooper were elected as directors. Their terms will last until the next annual meeting. Importantly, the filing notes that 3 of these new directors, Adam Son, Brian Fewest, and Kenneth Cooper, are considered independent directors under NASDAQ rules and meet specific independence requirements for audit and compensation committees. Brian Fewest is even deemed an audit committee financial expert. The new directors have also been assigned to key board committees. Brian Fewest will chair the Audit Committee, Adam Son will chair the Compensation Committee, and Kenneth Cooper will chair the Nominating and Corporate Governance Committee. Let's look at the new directors. Adam Son has experience in cyber-social threat identification and previously worked with a research institute focused on emergent threats. His background suggests a focus on technology and risk analysis. Brian Fewest brings a wealth of financial experience, having served as CFO for healthcare systems and holding various roles at a healthcare marketing firm. His expertise in accounting, finance, and investor relations is a significant asset. Kenneth Cooper has a strong entrepreneurial background as a founder and CEO of behavioral healthcare and dental organizations. His experience in scaling private equity-backed companies is valuable for growth. The filing also mentions that these new directors will receive compensation under a non-employee director compensation program. This includes annual cash retainers, an initial restricted stock unit grant valued at $150,000, and annual restricted stock unit grants. This is quite a compensation package for non-employee directors. Now, let's touch on the compensatory arrangements for some of these new officers. David Halliboo received an option to purchase 500,000 shares of common stock. This option vests fully when the stock value increases by 50% from the grant date. Brian Cogley also received an option to purchase 100,000 shares. With similar vesting conditions and a substantial annual bonus award of restricted stock units valued at $250,000. These RESES over a year, Ryan Shadell was granted an option for 100,000 shares with similar vesting terms and an annual bonus award of RECS valued at $150,000. These stock options and RSUs are being granted under the Z Squared Inc. 2025 Incentive Compensation Plan, which was approved by stockholders and became effective on the 27th of April, 2026. This plan allows for various types of stock awards to employees, directors, and consultants. The total number of shares available under this plan is capped at 15% of the outstanding shares. Under Regulation FD, the company also released a few press releases. One on the 24th of April announced the completion of the merger and the stock beginning to trade on NASDAQ under the symbol ZSQ. Another on the 28th of April announced the executive leadership appointments we just discussed. And importantly, a press release on the 29th of April announced the Skycore acquisition letter of intent. It is interesting that the press release for the Skycore acquisition came out a day after the LOI was signed, which is a common practice to get the news out. Finally, under other events, Z Squared established a board of advisors. This board will offer strategic advice, but its members won't have voting rights. Importantly, Pete Najarian or John Najarian, designated by MAP, and Mark X. Lepresti are set to join this advisory board. This leverages expertise from their consulting partners. Looking at the exhibits, it is clear this 8K is packed with a lot of important documents related to these announcements. We have the binding letter of intent for the Skycore acquisition, amendments to consulting agreements, employment agreements for the new officers, and the compensation plans. Overall, Z Squared Inc. appears to be in a period of significant transformation. The Skycore acquisition signals a strategic move into AI infrastructure, which is a dynamic and growing market. The rebranding and new leadership suggest a fresh start following the merger, and the new executive team and directors bring diverse expertise. However, the company is also issuing a considerable amount of stock through acquisitions and compensation, which could lead to dilution for existing shareholders. Keeping an eye on how these new ventures pan out and how the stock performance evolves will be key. The risk I am watching is how successfully they integrate Skycore, and if the AI infrastructure play gains traction in a competitive market. What I am actually looking for is consistent execution and profitable growth following these strategic decisions. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.